We begin in Oakland, where a hearing is underway that could determine home insurance rates for millions of Californians. State Farm, the state's largest insurer, wants an emergency rate hike of 17%. But first, they have to convince a judge. State Farm has already put in other rate requests over the past year, but this emergency request is a direct response to the deadly LA County wildfires in January, which destroyed more than 18,000 buildings, most of them homes. State Farm estimates it will have to pay out roughly $7.6 billion to fire survivors, and it says that will deplete its reserves. But Consumer Watchdog argues that policyholders shouldn't be on the hook.
These rate increases would help State Farm stabilize and rebuild its surplus to continue to be there for its policyholders.
Policyholders are not insurance company investors. They don't pay premiums to boost a company's surplus.
John Remus breaks down the arguments in this closely watched hearing.
There wasn't a lot of drama at this hearing today, but it is part of a process that will likely dramatically increase the amount it costs to buy homeowners insurance in California. With catastrophic wildfires becoming commonplace in California, the home insurance market is in crisis. The state's largest insurer, State Farm, says it's been slowly losing money for the last 10 years. And on this day, sat before an administrative law judge to argue that an interim rate hike is justified to keep the company solvent.
State Farm General's surplus, which is the money that's available to pay claims, has fallen from about $4 billion in 2015 to about $1 billion in 2024. Following the fires in Los Angeles, State Farm General has estimated that its surplus will decline to about $600 million.
They say that's not nearly enough to pay claims if another disaster should strike. So they're asking Insurance Commissioner Ricardo Lara for an emergency rate hike for all State Farm policyholders statewide. And the commission seemed sympathetic to the idea.
It is not in California consumers' best interest to allow State Farm General, the largest property insurance in California by far with 20% market share, to go bankrupt or to otherwise withdraw from the California market.
But hold on, says Harvey Rosenfield, founder of a group called Consumer Watchdog. He says Prop 103 requires that insurance companies prove that they need rate increases and that State Farm has been slow to do that.
The way it's been engineered by State Farm, it's a fast track. They want the commissioner to approve their rate increase now and then figure it out later whether it was justified or not. That's not how the law works in California.
There's reason to be skeptical. State Farm requested a 30% increase last June before the LA wildfires. Now, after the fires, they've reduced that amount to 22%. And now that they're being required to show proof, they announced at the hearing that they've lowered the request to 17%. As a result, Consumer Watchdog attorneys moved to strike the evidence being presented.
We've been demanding this information for 9 months, and last night, on the eve of this hearing, State Farm sent us 6 documents. We haven't even had a chance to look at it.
But industry expert Carl Sussman thinks Consumer Watchdog is just stalling the process.
Can we just get the facts here?